Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Best of the season, Bob?
Indeed, and the best to you and also to our listeners. And we're going to say a Merry Christmas and a Happy New Year.
Happy, merry all around.
Oh, sure.
Bob, we're kicking off the show as we usually do, answering listener questions. The first one, it looks like the junk bond market is going parabolic and the yield spread between high-grade credit and junk is getting to narrow as narrow as the eye of a needle. Meanwhile, some of the financial media predict that the S&P will take a breather in 2020 and then only go as high as 3,500 to 3,800, but then resume in a more serious advance in 2021 and beyond. Well, Frank Sinatra is saying something has to give, and it reminds us of the headlines. So, Bob, is something going to give here? Is it going to be the Fed? Do we have enough QE? Will there always be a wind at the market's backs provided by the Fed?
That's the wind at the market's back, yeah. That's a theory, but it never works. You get cyclical bull and bear markets and cyclical swings in the economy. But anyways, yeah, the urge to buy low-grade, high-risk stuff continues, including junk, high yield, and emerging bonds. But the emerging bonds, they had their high in September and were quite overbought and have not been making new highs. But yeah, there is a party in bond land, and there's an old saying on the bond trading desk, is a GMI market, which is get me in, and of course they're always followed by GMO markets, which is get me out. I think soon on this we're getting excesses, and you just want to wait and see a turnover. We also mentioned the spread between high-grade and low-grade bonds, and that over the last 8 months has accomplished 2 breakouts to reversing to widening, which is a warning. And but as we're closing out the year with this party, the spreads have narrowed quite quickly, but nowhere near back to what they reached earlier in the year. So, yes, the action is hot, but the behavior of credit spreads, which is high grade to low grade, and the yield curve is actually turned to, well, it inverted, and in the summer. And with our chart history back to 1857, every inversion has been followed by a recession. It's just the way the thing works. Now, some Wall Streeters over the last month or so had said because the curve was no longer inverted, the warning was off. This thing is, it goes to inverted, that's the warning, and then it turns to steepening. Now, the first part of steepening has helped the bank stocks, and now the further extension of steepening will say that the contraction is continuing or becoming more serious. And I have a high regard for the work of Frank Sinatra, and yep, something has got to give, probably early in the new year.
Well, I now do interviews with John Barber, who wrote jokes for Frank Sinatra. So you can check John Barber's comments out on the Goddard Report. He's got some great tales about old-time show business. He mentioned Richard Burton and Burt Reynolds. These are all people
Oh, for gosh sakes.
Yeah, personal friends of his. So check out the latest Goddard Report with my guest, John Barber. Some interesting tales.
I'll tune in on it.
Now, Bob, we have another question for us from Andrew, and it's all about Aramco putting out their IPO and offering investors who hold stock in Aramco for 6 months are being promised an additional share, and that led to shares soaring by 10%. And then he tells the story about, well, usually he slices his pizza into 10 pieces, but this time he sliced it into 11, but couldn't eat it all because there were 11 pieces. Anyway, he said, on a serious note, the OPEC cuts, are they going to bring the price of oil down? And is this a reaction to the recent surge in tanker rates? And what is the relationship between tanker rates and OPEC output?
Yeah, a lot of these things, when you get into supply demand, gets difficult. We just analyzed the price, and we had a rally here. My least colleague Ross Clark, maybe up to around 62 on the price. But looking back on the year, often you can get a nice rally for crude into late September, early October. This one was there, but it wasn't really strong. And then later in October, it got slammed all the way down to, I think it was 51, and now on the rebound. So we think it's close to ending. And as far as OPEC goes, that was a cartel, an attempt to kind of look after their interests by the producers. And at that time, the Middle East was the big producer, and this was against in North America, where both Canadian and U.S. governments were suppressing crude oil prices. At the same time, the U.S. was working, everything they were doing was going to end up with a huge drop in the U.S. dollar. So actually, OPEC was getting screwed. And eventually, market forces would have pushed the price up, but then they made it dramatic in the early 70s with really jamming the price up and causing all kinds of problems. But now with so much production being developed outside of OPEC, OPEC really doesn't matter. At one time, and during when it did matter, it was Sheikh Yamani who was always the spokesman for OPEC, and it was said about him that he commanded the attention like a cross-eyed javelin thrower at the Olympics. So, but anyways, yeah, the crude close to peaking, OPEC hopeless, and even more so because I think that over the next few years you could get a fairly serious decline in crude oil prices.
We'll have more with Bob Hoye right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, one of the headlines that you mentioned before we went on air, home builder confidence in the U.S. is at its highest in 20 years. Is this false optimism?
Oh, yeah, this is where it's there. And also there's a home builders in stock ETF stock index thing, ITB. And a number of weeks ago, it gave upside exhaustion signals, and so it's reached the action in the stock side of the home business has reached a technical excess, and then now you've got the accompanying headline of, my gosh, and then you got economic activity such as this at the best in 20 years. Hey, that speaks volumes. But the stock market's job, of course, is to discount changes in news, and maybe the best is in on the whole stock sector for the home builders. We'll see, and again, we're relying on the changes in the yield curve and changes in credit spreads, and they will be telling the story.
Another headline: Wall Street magic makes banks look safer than they are. How safe are the banks?
Oh, gosh, yeah, that sort of reminded me of back in when the big Nikkei Tokyo stock bubble, which ended in the end of 1989, and they had some sort of strange warrant deal they were doing that effectively gave them money at next to no cost. And in Japan, it was called Zytec, and it essentially meant financial engineering. And then this is the headline from the Wall Street Journal about magic tricks make the banks look safer than they are. I think that's a very valid headline. And the thing in banking is that it can change rather quickly depending on, again, credit spreads and the yield curve. But what a wonderful headline. That was like the one in 2007 where I think it was the head of Citibank said that it's a great party and we're dancing with the music and the music's going to continue. That's not the exact quote, but that was the meaning. And here, this is a very critical headline about magic tricks in the banking sector.
We'll have more with Bob Hoye right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. One of the headlines from Japan also today: Japanese December factory orders are the lowest they've been in quite some time, and they've had nothing but declining factory orders in the last 8 months. What does that tell us?
Yeah, that's telling what's going on there. And another headline was about Japan's exports diminishing, and of course whatever they're exporting would be, a lot of it would be to Japan or to China, and that's slowing. So you've got a mix of headlines, some of obviously boom quality and another of skepticism with magic tricks with banks, and then at other parts of the world things are not so good. You get actual slowing in important economic series. So we have to watch for that, and we'll just see what the new year brings. The other thing I wrote yesterday, Jim, is what we used in 2017, where in early October, one of our editions noted that the whole world was going to get bubbled, including the Dow Jones, and then noted that a number of significant speculative moves in different things had concluded in the turn of the year period, December, January. And there was even the 1907 bubble was to, I think, January the 11th. And then that was called the Richmond's Panic when that one crashed. And then you had the top of the market, a very important stock market, was in, I think about the same date, January of 1973, and then the worst bear market since the Depression followed. And then you had gold and silver went absolutely crazy, and the peak there, I think it was January 20th. And then you had the great bubble in Tokyo, and the Nikkei was going straight up, and that was to the last trading day of 1989. So there are a number of examples of terrifically speculative moves running right till year end. And of course, this then gets us into the Santa Claus rally and all sorts of things like that. And this, of course, where you see it, in the Santa Claus rally, when you see the stock symbol HO going along the tape, the ho-ho. And we're into that. Let's call it the Santa Claus rally. And what we'll be doing, Jim, is watching for technical assesses on this to advise our subscribers.
Japanese local banks are turning to high-risk debt to survive. Are they putting themselves at high risk just by doing that?
Oh, yeah. Somewhere they're getting squeezed on careful instruments, loans and whatnot, or liquid securities, and they're just not making enough money, so their balance sheets are out of whack. So then they are then forced to get the higher yields from riskier bonds, and this is a direct result of central bankers with erroneous theories. And we'll just finish off with this one, Jim. The theory, they've looked at the business cycle, and they've seen that credit expands as business activity increases. Sure, and businessmen use money to expand their businesses. And then they have this, it's called a primitive syllogism in logic, where you confuse correlation with cause and effect. So then, the classic example is rooster crowing at sunrise, and obviously rooster crowing at sunrise causes the sun to go up, and this is what it's about. So then the central bankers and economists make this grave error in saying that, if we push out credit, then it'll push the economy. But because that's a blunder, it doesn't happen. And what happens is the public chooses what to speculate in, and it will, in full flight, use borrowed money, get leveraged up. So what you have here is, like in Vancouver, where the house residential prices for real estate soared immensely, hugely relative to many other places. And it was Asian money coming in, people making money in Asia through all kinds of things, and one of them is excessive credit. So you have this bogus theory that's still being practiced by central bankers, and they would say they push out credit, and they earnestly believe it'll push the economy, but instead the public will use it to speculate in whatever is the hot item. So you have two things going on. As to say, you've had very hot real estate prices for residential, specifically in Vancouver and other places. And then at the same time, the interest rates have gone so low for normal instruments that banks in Japan can't make any money out of it. So then they are then forced to buy very risky bonds. So these central bankers and their hopeless theories, they still have a lot of control, but they're doing so much damage. I mean, the bigger the party in the financial markets, the harder the contraction will be. But I think that on this next contraction, the public's going to look at the trillions of dollars, particularly in the U.S., the trillions of dollars that the policymakers have thrown into the financial markets in order to prevent bad things from happening. And then on a contraction and a recession, bad things will be happening. So I think the public is going to take a look at that and say, hey, your theories are not working. We're going to find a way to constrain the recklessness. And, of course, that would be a gold standard. And I do believe that eventually the public will demand sound money, and the only way to get sound money is through gold convertibility. And I'm looking forward to it sometime over the next few years. I'm hoping I'm still around for it, Jim.
Oh, yeah, you will, Bob. Bob, all the best of the season.
Indeed, you have a good one, too. And on our listeners out there, we'll repeat it, a Merry Christmas and a Happy New Year.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, and you know we answer them, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Happy holidays.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.